Okay guys, this was the trade I took based on the concept of internal range liquidity and external range liquidity, and I'll be breaking this trade down and why I took this sell. Now this was, I didn't actually take this one, I took this and this, right? And on this day, which was yesterday, there was news, a high impact news, so that was why you saw this clean move here, right? So let me just take this off. I have to clean my screen and break down why I took this trade, right? Okay, so from the daily time frame, okay, from the daily time frame, you notice price has taken out internal range liquidity, right? Taking out internal range liquidity. So the next place price will be coming for is the external range, right? We've taken internal range. So the next place we'll be coming for is the external range, which is this place. Internal range liquidity. Now price is coming for the external, which is this low. Okay. So this is the external range liquidity I had in mind price was coming to take out, right? And from the 4 hours time frame, you see since price took out this internal range liquidity here, we've been bearish. We've been bearish. Now some persons might ask me what are the types of liquidity, internal range liquidity we have. There's FVG. My my trading view is giving me issues. So there's FVG as internal range. There is weak low. There is weak low. There is also um, previous previous days high or previous days low. Each section low slash high. Section low slash high. That is the Asian section, London section, New York section, basically. And what else? Week low as well. Week low and high. Also have week low and a week high. So basically, a week low and a week high are lows and highs that do not break structure. That they just swept liquidity. So they are weak lows and highs. So um so for this case, this internal range liquidity, if you check it was formed on Wednesday. Check it closely. Look at my cursor here. It was formed on Wednesday. So that was the week high for that particular week. The week started from Monday. This is Monday and this is Friday. So you can see, let me highlight that properly. So this is Monday. The week started from Monday down to Friday. Okay. So the whole of this week, the whole of this day was just 1 week, and you can see clearly that was a week high, the week high, right? The highest high for that week. So that was what price came to take out. So once price took it out, price started reversing, and you can see clearly price started forming bearish mitigation. So I had this mitigated, and then this move here, right? I was not on my charts to see this move. Okay, so the trade I took, which was this and this on this day. So let me go to the 1 hour time frame. Okay, so this first trade I took was a bit aggressive. Okay, so remember this is what I was expecting price to come take out. but immediately price got towards that direction, we started moving up, right? So I marked this out. This was the last supply we had here. That was the last supply we had. And if you look closely, this is a pullback. This could be an inducement. This pullback here, that is an inducement. Okay, so this pullback here is an inducement. Price took it out, and um, if you actually don't know why it's a pullback, you just subscribe to this YouTube channel because I'll be making videos on identifying valid and invalid pullback. So this is a pullback because it swept the previous high, the last candle's previous high, right? So this candle here, this particular candle here, it swept the high of this candle. As you can see, this was the sweep here. So that is a valid pullback, right? And then price came to this supply here. We had this supply. Price was reacting from here, right? And then I was a bit very aggressive on this trade, so I just took my entry from here and I was targeting that low, that liquidity below, this external range liquidity here, right? But if I was to be less aggressive, I would have waited for price to give me a bearish intention, and this was where price started giving the bearish intention here. This zone, let me show you. So we had, let me go to the 15 minutes time frame. Around that place I circled. Okay. So look closely here. You discover price started giving a bearish intention. So I didn't mean I did not take this entry from here. This is where I would have taken it from here. Look at both price mitigated this zone, this place. Remember, this mitigation started from our POI, right? Let me extend the POI. Okay, you can see clearly that's where it's the investigation is also in our PI. So these are some of the things I look out for when I want to take my entry. And then price took out this high, price took out this high, that's an inducement, and reacted from something here, right? Price took out that high, and then my entry, where I would have taken my entry, would have been from here, this candlestick here, and targets the low. So you see, you actually don't need to be in a rush to take a trade, and this would have given me more risk to reward if I taken this particular entry instead of this. So you see, this one is less risky and more profitable, right? But this particular one here is more risky and less profitable. This was a 1 is to 8 and this was a 1 is to 7. But I actually didn't take this one because I was already on this trade here. Now on Thursday, which was yesterday, how I took this particular entry. Now on the 1 hour time frame, I had, let me take this off. So on the 1 hour time frame, still following mitigation, I had this candlestick marked out. I had this candlestick marked out. This particular candlestick here, I had it marked out. Right? Now if you watch closely, there's an FVG. There's an FVG here between this candlestick and this candlestick. So this is the FVG. So it's actually a high probability order block. Price can certainly trade into it because of the fair value gap there. And also I was waiting for an inducement, right? Now price gave a clean inducement using the Asian high. Now this was the inducement price gave, this particular high here. And if you check when that high was formed, it was formed around 5 a.m. GMT plus one Nigerian time. And 5 a.m. as you know is Asian section. So immediately I saw this inducement, this is an engineered liquidity. So immediately I saw this, I was more confident in this setup. I was more confident in this setup. So when I saw that, I took my placed my entry, my sell entry from there, and I was also targeting that low below. I think this trade gave about 4 hour, or was it 3 hour? Yeah, 3 hour. So that was how I got into the two trades I took this week. So um this is clearly, remember, we are moving from internal range liquidity to external range liquidity. Basically that's how price moves, right? So in subsequent videos I'll be making videos more on identifying a valid pullback, a valid break of structure. Now if you look closely, this was the sweep. Now some traders would want to buy from here. Some traders would think this is a market structure shift and they want to buy from, they start buying from here. And if you watch closely, if you go to the 5 minutes time frame, you notice market reacted from that zone. Let me show you. Okay. What you notice, there was a kind of pullbacks. Look at the buy. Market made a little pullback here, but it was not too aggressive because that zone was not a valid buy PI, because the market was already coming to take out the external range liquidity. So guys, if you found this video valuable, give it a thumbs up and subscribe, because I'll be making more videos on trade entries and um, stuffs around trading in general, how to identify a valid break of structure, where to take your trade, and the rest of that, right? So give this video a thumbs up and also do well to share this video with a friend so they can also benefit from this knowledge. Thank you.